Welcome to Akshay Money Management for the November series. First, let me wish you a happy and prosperous Deepavali. The market is going to touch all-time high, and from there may be a 3,000 to 3,500 points correction. Let us see what happened exactly. Market started from almost 58,700. From there, it's gone almost 62,000, and after that one again decline happened, almost like a 3,000 points or 2,500 points correction happened. So 59,300 is what bottom we are seeing in the month of October. After that one, it started taking a U-turn in the November. So we have seen there a lot of movie actors continuously hits they're going to give it. After the some time, what happens we don't know. So maybe the selection of the stories is not good, or maybe age factors, they start declining over a period of time. So now the worry is whether same thing happening into or in the stock market, because we have seen almost 18 months in the good rally, whether from here like other Bollywood stars, whether market is also is start going down. So for that one, we should understand where exactly we fit into right now situation. Then we'll understand that whether market will going to correct from here or is still the uptrend is on. So let us understand the data points then before coming to any conclusion. We have a 4 quadrants. One is declining phase, bottoming, rising, and maturity. These are the 4 stages of any stock market. Once it goes up, it should come down, and if it goes down again, it should go up. So these are like a cycle. So where exactly we are, for the most important for this market to go around is a major thing is interest rates. So let us see whether interest rates is a positive to the market or negative as in the current scenario. As we know it, interest rates are almost 20 years down from almost like a 12% interest rate in 20 years back. Right now we came to almost 4% inflation. So that is who is going to get the benefit? Obviously, there is infrastructure and housing sectors. In 2020, assuming you are taking the housing loan, at that maybe 13.25 was a rate. After you are deducting the ATC and the interest, the effective was 12.25%. Today, in 6.7% interest rate, after all deducting of your tax benefit, there is hardly 3.3% is the effective home loan you are paying to the bank. So this is the commonly asked question by our customers, that should I close my home loan? This 3.3%, this cheapest money what you ever going to get it. So for all my customers who has the loans, I request to continue, or if we willing to take a home loan, is a correct time. Last 12 to 18 months, we are seeing the very good demand is coming into the infrastructure and housing sectors. So this sector, if it boom, it gives a lot of employments to the lot of various class of people from the small to the high. So this is the main backbone of the economy. So as long as infrastructure and housing is doing well, you can see the money is flowing into various economies. So we have seen government started spending a lot of money on the roads and railways. We have seen the 28% jump from the last August 2020 to August 2021. So this is a good sign of the economy market to go up. And because of all these infrastructures are going up, definitely the major inputs, that is steel and cements prices, are going at the all-time high. So we are expecting the capex of all the steel companies will move to double from here in the next couple of years. So there's a what we are given the steel company stocks and also cement company stocks. We are given the recommendation in the previous our videos. And beside this one, there are a lot of FDIs flows continuously happening in the Indian markets. If you see, India stands number 2 among all the emerging markets. So FDIs are seeing India as a sweet spot. So this all leads to our GST collection. So GST collection all-time high, we are reaching to all-time high. Is a 1,30,000 crores is the last month collection. So this is a good sign that we are seeing the economic movement is happening, and government is getting very good GST collection, and government is spending on the very good infrastructure and roads. So if you see the cycle, which is bottom in the last 2020 first quarter, we are seeing the housing gone into the bottom. Today we are seeing the housing is coming into the rising mode, and obviously corporates also is started moving into the rising. So we are in the from the bottom, we are shifted to the rising phase. We have seen the last month almost 1,000 companies had given the quarterly results. So if you see among the 20 companies, 4 companies showing the red sign, which is a decline in the profits. Remaining 16 companies have shown the profits growth. So that means 60 to 70% of the Indian companies are showing the incremental quarter-on-quarter basis. So to understand whether companies are making profit or not, if you compare to all the departments, the core department is a sale. For example, it may be a small samosa wala to any 5-star hotel. Their sales and services should be offered and should be having a demand. Then only they will see all the profits. So let us see, as sector-wise, I had given the data so that it will be easy for you to analyze it. First is IT sector. If you see IT sector, from the last 2 years, every quarterly basis, sales is increasing it. So that shows the potential of the IT industry. And second, NBFC, non-banking financial sectors. Yes, we have seen the dips in the pandemics, but yes, today, if you see September, it has gone all-time high sales. And coming to the pharmaceutical, yes, again, there is also having a dip in the 2019 and 2020. Now, if you see for the last 2 years, the sales of pharmaceutical is gone into all-time high. There's a one sector among the top 5 sectors, if you compare it, the one sector which is in the trouble is the automobiles. Automobile sales is declined compared to last 2020 and 2021 first quarter, 2021 second quarter, and the third quarter we have seen the decline. As everybody knows it, there is a chips shortfall. That's why the sales are going down. So as we heard that Maruti and Tata has cut down almost 30% of their manufacture because of the chips shortage. So if I put everything in a one sheet of top 10 sectors, all sectors are showing the positive growth. Sales is in the positive direction, except the automobiles. So that gives a confidence that if you see, again, coming back to the graph, if you see the profits of the company, last 2020 first quarter, if you see it, there is in the red, means a bottoming. So after bottoming, definitely companies are increasing it. They're showing the profits. So companies are in the rising mode. Housing sector is in the rising, or it may be corporate capex is in the rising. So these are all things which are the major factors which drive the stock market. So these are all things definitely not there in the declining phase, neither in the mature stage. They're still in the rising one. So after rising, we should see the maturity. Then we'll see the stock market will go corrected. So as of now, our expectation is still this Bollywood stars, I can say, has juice where we can expect good profits to the corporates going to come, and stock market from here also, it can take to the new heights. Coming to the stock picks. So one, I'm giving you 2 stocks. One is a trading stock. Trading means you make some money and get out of the company. There is a Share India, you can look into that one, which is a finance company, and IT company, which you want to place in your portfolio, Mindtree. We already have in portfolio, we added to some more stocks in the Mindtree. These are 2 stocks you can look into. And thank you for watching Akshaya Money Management. We'll meet in the next month. Thank you very much.